Uh, Good to be back again. I thought I'd do a monthly post. I haven't done one for a quarter now, so apology for my hiatus. I firmly, the blame is laid squarely at the foot of homeschooling, but that's only an excuse. No real reason for missing them, so I do apologise. Now, listen, we'll have a quick look back at the last month. Been a good month. The D's broke their 57-year drought. My beloved Bombers remain finals winless after, I think, 21 years now. But we've got NFL kicked off, which is good news for some of us, and my beloved NBA, which is going. I'll have a quick chat to you about some markets information, basic economics, a little bit about crypto. Everyone else is talking about it now, so we will begin talking about it. And what good would an update be if it didn't have anything regarding COVID? So quickly, just to launch into Australia, we remain in the grip of COVID and haven't come out the other side of it quite yet. We'll discuss that more in a moment. If you hadn't heard, we ditched our diesel contract with the French, building our submarines to be replaced by nuclear-powered vessels under this AUKUS arrangement with the UK and the United States. Most notably to counter China's growing influence in region. RBA monetary policy sort of further softened. That bond buying purchase decision put off to Feb 2022, so buying remains, which is a stability matter. Consumer confidence far more resilient this time round in lockdown, so in 2021 versus the 2020 version, as people then didn't know if they were going to get through it and how they would get through it. We now know we're getting through it, what it looks like. We have a vaccine, there's a rollout, etc. So consumer confidence rebounding back, and that's reflected, of course, what we see in property prices. And we talk about property prices and are we going down, up, sideways? It feels like it's toppish. It feels like it has been, and we've been saying things like that for a long time. So trends your friend, as they used to say. Gladys resigned in New South, was doing, arguable by some, but was doing a good job with the rollout, and was brave enough to do it the way that she did it. But IBAC has cost her a role back home here. Victoria's own Andrews also likely to face pressure due to an IBAC inquiry, like it or not. In the US, that debt ceiling tensions arise again. Will they extend? How they extend? When they do? Obvious divisions remain after that governmental transition, so those divisions are likely to remain at least for the foreseeable decade and or beyond, I would expect. There's no real change there. And that Fed's threshold not reached to raise interest rates as yet. In Asia, the Evergrande is the focus. Just keep in the back of your mind that around 70% of private wealth is tied directly to property in China, so that is a significant exposure, not dissimilar to here in Australia. The stock price forever. We've heard about the defaults. They've got that 30-day window that's coming up soon, October 26th, so close to that 30-day window on that first default. They have lost about 90% of their share value year to date. So they will unwind their very complex and over-diversified business model, and the amount to which the Chinese government get involved and help there, it remains to be seen, but there has to be some involvement. They are a gigantic company who are overtly complex, and there will need to be assistance there. Does that pose the risk for contagion? Of course it does, to an extent. We've already seen that played out with iron ore prices dropping here in Australia for BHP and whatnot. Since Evergrande issues became noted over here, if they're not building property over there, they're not requiring iron ore from us. From a markets perspective, our index was down a couple of percent this month. Energy was up. There's the electricity crisis, in case you haven't heard. Materials were down, so that's just talking about the point I just made with BHP down as a result of the Evergrande retracement issue that we're facing over there. Global equities also down slightly. Asia off harder, again, Evergrande. Gold down this month or last month slightly. Oil was up smalls. Cryptocurrency, some government regs are changing. We're seeing it become legal tender. Where was it? Somewhere in South America did it the other day. So some sovereigns recognising Bitcoin, they've been buying it up, and they will allocate partial Bitcoin to people of their country. so they can start using it as tender. So that's happening. On the other side of that coin, China's banned everything to do with crypto. So, people's minds will shift back to the US for sort of growth opportunities and how to see crypto continuing to unfold. We are not there at a point where we are anywhere near recommending cryptocurrency as part of asset allocations yet. Not here. COVID-19 vaccinations remain top of mind. So we've been saying for months now, the only number that, well, not that it doesn't matter, but the only number that is pertinent to how quickly we get out of this is the vaccination rate rather than the case numbers as terribly drastic as they've become in recent times. US is allowing for quarantine-free international travel for the fully vaxxed. Just notably, Singapore, with an 82% rate of double vaxxed people, reimposed some restrictions in the last week and a half. So their death rate remains at 0.1%, so very, very low. But even been a world leader in terms of double vax rate, they will still impose some more restrictions. So they don't want that to proliferate again on a third or fourth round of the disease. Listen, that will do for now. Good to see you all. I've probably talked too long for our initial conversation and catch up. That's our September wrap. That's our mid-October. I'll be back doing this every month. Good to see you all, and send me some questions. Bye.